Hello traders, Rich here, and here's a quick but detailed update on GBPJPY. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. We clearly see GBPJPY has been overall bullish, making higher lows and higher highs, trading inside this rising broadening wedge. However, we are currently approaching the upper trend line, acting as an overbought zone, lining up with this previous major high from weekly time frame. That's why we are speculating that the bears would take over from here, of course, unless it's broken upward. In this case, we'll be expecting further bullish movement upward. If we zoom into H4 time frame, we can see the latest bullish trends, and we are currently around the upper bound of this rising broadening wedge from daily time frame. If we zoom into M30 time frame, know that we have been stuck inside this range around this upper bound from daily. That's why, as per my trading style, for the bears to take over, need to see a break below the previous low because we're around a massive resistance zone. When the sell is activated, the stop loss would be above the previous swing high, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective. Of course, we are still waiting for the trigger, which would be a momentum or big bearish candle close below the neckline. Meanwhile, GPGFY would be inside the range or can even break the resistance upward and trade higher.
Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue.
As we clearly see, gold has been stuck inside a big range from a long-term perspective, trading inside this flat broadening wedge, and we are currently approaching the upper bound after rejecting the support zone as per my last analysis. Anyway, we are currently approaching this upper bound around 2k and 2075. That's why we are speculating a bearish correction from here, and for the bulls to take over from a macro perspective, we need to see a break above the previous all-time highs around 2075. If we zoom into daily time frame, we see that we have been bullish after breaking above this high. We had this impulse correction, and we are currently in this impulse speculating a correction movement before the next impulse push the price higher. And we have been stuck inside this small range, which we can see from H4 time frame, and lately we have been trading this range upward and downward until eventually, of course, it's broken. If it's broken downward, we'll be expecting a deeper correction as mentioned from daily that around this area where we'll be looking for buy setups, and if it's broken upward, we'll be expecting the price to dive inside this all-time high zone. Meanwhile, we are trading this range, right? If you zoom into M30, we are currently trading inside the smaller like pattern if you want, or a range, and for the bulls to take over from a short-term perspective, we need to see a break above the zone. Once we have this break, the bulls will take over again from a short-term perspective, just like previously here and multiple examples. The stop loss will be below the previous major low, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective. So long story short, inside a big range from a medium term perspective, we are trading this range. That's why we are looking for this buy unless it's broken downward. In this case, we'll be expecting bearish continuation. Best of luck, and I'll see you hopefully on the next one.